Hey traders, welcome back to another Sunday video. Hope you're doing well as we get ready for the week ahead. Wanted to go through some of the charts that I'm watching the closest. We had the dollar index show a little bit of bounce back this past week. We've got some currency pairs that I want to look at. We're of course going to look at gold, and we'll take a look at the indices where I am still very long and trying to make some moves on those as well. So let's jump right into it. Before I get into too many charts, I did want to just mention here or just update you guys on where I'm at in terms of my P&L for the year. Now, I do this periodically for a number of reasons on my channel. First of all, I think that you guys have busy lives, and I think that if you're going to spend time trying to learn how to trade, that whoever you learn from or whoever you invest your time in, even if you don't pay me any money for anything, I still think that if you're going to invest time with me, that you should ask me or anyone else that you watch to see what their trading performance looks like. It adds validity to what they're telling you. It adds, some sort of, okay, you actually do this stuff. And I think it's important. So I'm not out here making massive gains, but for me, a 12% gain it's a very middle of the line year, because considering we're, just going into September now, this is not a remarkable return in terms of a percentage for me, but I'm not going to complain because it's a good year, and 12% added to the account does me, wonders over the years, because if you keep doing that, you keep compounding it, then this 108,000 on a 12% will turn into much, much bigger over time. So I just wanted to show you that. Also, I wanted to discuss just for a moment this dip that I had here in this past month. So August was actually my roughest month of the year by far. And I discussed this recently about how this big slip here in the P&L actually happened because on that Monday morning when everything kind of went parabolic, the VIX shot up like crazy, my QQQ trade, I was long, I got slipped pretty terribly. So what happens, what I mean by that is let's say I'm in a long, right? So I'm in a buy trade, and the market for futures, FX, ETFs didn't matter. It just went like this. So I was in a trade, and let's say my stop loss was here. What ended up happening is that when the market opened up, it was down here. And so I got stopped out, which triggered a much larger than my initial risk on this trade. Now, what can you do about that? The answer is nothing, except for close trades over the weekend if you don't want to, carry that risk. But also there's a double-edged sword there, because many of my trades holding over the weekend has been very rewarding. So the long story short is when that happens to me, it's kind of just well, that sucks, but there's nothing I can do to change that. Sometimes you're just going to have bad slippage. The good news is sometimes slippage helps you in the other way, right? Sometimes you gap up massively on a position. So you kind of just have to take it for what it is, but it is a little bit frustrating. Regardless, the first half of August was a terrible trading month. The second half was a rock star. A lot of my positions kind of came roaring back, and I'll discuss those here now. In fact, I'll show you what kind of led to the bounce back and there are still several unclosed positions for me. I went long gold during this time. I also went long a couple individual stocks that I liked, but the big winners were my SPY trade, which I'm still in, SMH, IWM, CrowdStrike, NVIDIA, and there's so much to talk about here. I bought a couple individual stocks, just small positions on the account, but they still, tallied up together have contributed to the bounce back. But the big gainer was the S&P and the SMH, which is a semiconductors ETF. So I just wanted to show you that because, again, I think it is important that if you're going to spend time on my videos with me, that I actually have skin in the game, that I actually do this, and I'm not just here to sell you a course. In fact, I don't sell a course. So I do sell stuff, and I'll get to that in a second. But just trust me on the fact that, I'm not here to try and coerce you into buying an expensive course or secret strategy. I tell you guys exactly how I trade on my channel. No, I don't keep anything held back. All right, so let's jump into some charts here. So the dollar index trading at 101.73 and bouncing off of these lows here this past week. And I actually mentioned this past week that if we do get, the dollar index continuing to push up into this region, I'm actually very excited because that sets up for me some bearish setups, some bearish signals on the dollar. And I want to take a look at that. So I was looking at this week's updated top setups page, and you can see I removed everything except for the strong ratings, and I removed minor currency pairs. If I add minor currency pairs, we get a little bit more. Because it's so light, I'm going to leave the minor currency pairs in here today because we have kind of a lighter top setups page than we did last week. Last week we were very busy. We had a lot of watch list tools, watch list items. But a couple ones that popped up to me: pound yen, pound dollar, the Dow Jones, the DAX, NZD, USD. Couple things here showing up. And I don't usually trade USD currency pairs, but we may end up looking at them because things are a little light on the top setups. The first thing I want to address here is the dollar index. Does it have room to continue upwards? And I do think that in the short term it may. We may see a 50% retracement on this dollar index move. I think that actually looks very normal, very healthy, right? You have this big push down, very natural to get just a pullback, a corrective pullback on the daily chart before potentially we continue to see that downtrend unfold. So I do lean that way. I do think that we continue to see the dollar index moving lower over the next few months, especially as the Fed gears up to cut rates. Let's take a look now at gold really quick in reference to that. So I am also long gold. I mentioned that this is another position that I have. A little bit of a disappointing week because gold just did a whole lot of nothing in actuality. Last Thursday, it dipped, not this past Thursday, but the Thursday before, it dipped down and tagged me into a trade, which snapped back in my favor, which was great, but then we never really followed through anywhere. And for those of you who are wondering, so Nick, do you just close if it hits, goes into consolidation like this? Do you take profits at resistance? If you're newer to my channel, what I personally do in my trading, how I manage winning positions, is I actually look to trail stops until the move is over. So I mentioned all week a couple different times that we've got this level of resistance. For those of you who are also watching gold, you might want to mark up 25.25 on your chart. That's $2,525 an ounce on gold, which has been this big resistance player right here. And when I say resistance doesn't necessarily mean, oh, this is where we're going to campaign to the downside from here. I'm just telling you that this is an area where we can clearly see the sellers are holding their own, but they're not selling and continuing lower. In fact, this does not bode well for either side necessarily. It's just consolidation. So don't overthink this. Buyers and sellers are just about equal right now, but we'll see if buyers can overtake the sellers and move past that 25.25 level. If we get a break above, that looks very strong for gold, and I think that the continuation is set, or more likely than not. And also, I've been waiting for that higher high in order to confirm where I could actually trail a stop. So let's just say, for example, that we get a big, nice green candle out the gate when markets open up. First of all, that would be really nice for my position. But second of all, that would actually give me a signal like, okay, now we have something to do with the stop loss. Now I can trail my stop loss, which is here, up into this area here. And just for context, I'm actually trading GLD. I'll pull up GLD so that you can see what that one looks like. So this is my actual position. And again, if we see a break through this high point, actually, let's just mirror what we've got in terms of this resistance right around this area. So if we can see a big green break through the highs on this one, then it would tell me, okay, you could probably move your stop loss, up into this region here, right? So I'm watching that on gold. That is kind of my game plan this week. If you're somebody who's not in a position on gold, if I wasn't in a position, here's what I'm looking for. I'd either look for a retest up into this or down into this region here, that 24.75 level, which I bought previously, or if I'm not looking for that, I'd be looking for a break through the highs and a possible, continuation play. So I'd be looking for the break and retest, basically. That's what I would do. That's my strategy. That's my approach to the markets. When I say that with, such emphasis on how it is my strategy, my approach, I'm saying that because if you're somebody new to this stuff, I'm not telling you that you should go do that, because you should really just trade what your strategy, what your back testing tells you to do, because we each have slightly different ways of looking at the market. There are some common themes, but nobody trades exactly the same. And so just something to think about. Let's push on. I want to take a look at the S&P 500 with you guys, which, man, this thing, kind of a weird week too. I got to say, I'm kind of thankful that I'm still in this trade, because you can see where my stop loss almost got hit. So I actually trailed my stop loss on the break of this candle here, we had, this push up, and I said, okay, I've been in this position for a few weeks now. This has become a monster trade for me. And I decided, I'm going to lock in my profit here. We've nailed through levels of resistance. We've got a stop loss that needs to get moved, and we moved it right below these lows. And, what we saw is price ended up consolidating, pushed lower for the bears, but bears were not able to hold it. And this movement lower, by the way, was the NVIDIA earnings. So NVIDIA earnings came out, and they were good, but they weren't as shocker as people were hoping for, which caused the market to tumble a little bit as a whole, because that's how powerful, that's how important NVIDIA is to the whole story. So anyways, yeah, NVIDIA drops, S&P drops, and, I looked for, it looked like I was going to get trailed out of my trade. But, in the past few days, we've bounced back pretty strongly on some good economic data, and I just want to discuss that for just a moment. Before I do, I just want to mention that we had a 35% off sale going on last week on the Edgefinder. That is going to be closing down today. So if you want that 35% off discount, the information for that will be linked, and promo code will be in the description if you just punch in code YTVIP at checkout to get you that discount. So don't miss it. We'll just leave it to the end of the day, and then that code will be going away, and the discount will be over. So if you want access to our tools, you can get that there. Again, we will be taking a look at all sorts of stuff. We'll take a look at the commitment of traders data in just a second. But because I was just talking about the economic data for just a moment, let's talk about it. Also, if you're wondering why the indices, let's do indices only for a second, and I'm going to show you guys all the indices right now. Why is the S&P 500 no longer in the bullish territory? Well, I warned you guys on this one that seasonality in September starts to look a little bearish, and I want to show you that because it's very important. If you're an index trader, check this out with me for a second. So let's go month of the year trends. And let's take a look at, we're going to go find the SPX 500. Okay, so check this out. In the month of September, it is the one month in the last 10 years that historically has performed negatively for the S&P 500. Does that mean that every month of every year is bearish in September and bullish in all the other months? I wish it was that easy. No. It just means that there is a slightly higher probability, if we're just going based off of the last 10-year average, that September could be a quote-unquote give back month, or a pullback month, or even a reversal month. We could see the start of heavier selling come into the indices in September. It's possible, right? It always is. I just wanted to mention that because when we go back to the top setups page and we look at indices, the reason is because we flipped from a +2, right, all the way to a -2, because seasonality on the Edgefinder for indices gives 2 points for seasonality, right? So seasonality is a big player for indices. And as we go into a more negative period, we do need to be a bit cautious on that front. And so again, we're getting some bearish pressure here, which reduces the scores for most indices down into the neutral camp, which I thought was very important to mention here on today's video. And the second important thing is, I already know people are probably now going to wonder, so Nick, if you're long the S&P 500 and seasonality is saying that likely it will be a bearish month, does that mean you close your trade? And that's a perfectly valid question. But my answer to that is, the answer is no, because I don't change my strategy on the technical side. Like, my technical entries and exit strategy is, a unique kind of way that I just, well, not really unique. I know a lot of traders who trade similarly, they trail stops. But it's unique in the sense that I don't let the fundamentals or technicals like completely guide one another, right? So once I have a fundamental bias, which I did for weeks here, to be bullish on the S&P 500, and I am bullish overall, but in the month of September, I probably won't be adding positions unless the Edgefinder gives me a fundamentally bullish view. So with this, I won't change what I'm doing on the technical front. So I am already in a long trade, but I am aware that we could see sell-offs. If that happens, then I will cut the trade and take profits. If it doesn't, if we have an anomaly month and this thing just screams through the highs, then I will just continue to trail stops and my technical strategy will not change. But please understand, I can't operate without both. So in my trading, I need both the fundamental analysis as assisted by the Edgefinder, as well as a technical exit and entry system, which I use in all my videos. So sometimes traders will listen to my videos and they'll say, well, I really like this. I'll do this. But I don't really want to do all that fundamental stuff. That sounds too hard. But I just want to say that this by itself doesn't make me a lot of money. This by itself doesn't make me a lot of money. The two of them together, having a systematic approach, right? Having a systematic approach and employing both technicals and fundamentals, that's what's really done it for me. And I say that candidly. I show you guys my account for a good reason. This is what works for me. I make money doing this. And there's no disputing that because I show you guys my account all the time. And again, I'm not doing that to brag to you or to flex on the internet. If I wanted to do that, I could show you my, I don't know, my fancy car, which I don't really have. So I do have a Jeep Rubicon. It's a beautiful car. I really actually love driving my Jeep. But my long story short is I show you guys, P&L because I think that is a very important thing to show. And I talked about that for 3 minutes at the beginning of this video. So just understand it's why I do that is to add validity to what I'm saying and so that you guys don't feel like you might be wasting your time. And believe me, man, there are many people out there, sadly, who have overinvested countless hours of their life into someone who's never shown them long-term trading profitability. And that is just absolutely devastating to me. I can't tell you, this is just a quick pause. We're 16, 17 minutes into this video. It actually makes me so angry and bummed out when I think that people who, let's say you are a single mother or you are a super hardworking dad or, you're a student and you don't have any time. You have like an hour and a half a day, let's say, to chill out or do something. And you're one of those people that's taking that time and you are trying to learn to trade. You are trying to improve yourself. So many people who are in that position, they're kind of desperate to try and figure something out. They're trying to make an extra source of income. They're trying to improve. They're trying not to lose any more money in the markets. And here comes this guy on social media who never proves that he does what he says, but he sounds fancy. I'm not speaking about anybody specifically. I'm just saying there's many, many charlatans out there that appear to be very knowledgeable, but never show you a track record. They never show you a MyFX book. They never show you their broker logins. They never do any of that. How are you supposed to know if you just tossed years of your life down the drain watching this person or not? So when you watch me, I show you that because I respect your time, and that is why I do it. It is not because I'm trying to make you think, oh, Nick is the coolest, the most rich trader, because I'm not, and I'm not always perfect. And I'm only up 12% this year. It's not a glamorous year, but at least you know that overall I make money doing this. I'm not wasting your time. So anyways, let's also talk about the Russell and the Nasdaq. So the Nasdaq, again, a little bit of resistance came in here. I think that we continue to see this thing go higher. We may take a pause in September. We may see, price go back and retest levels like 18,600. And, that's kind of that seasonality potentially. But I also want to remind you that when I show you neutral, right, a neutral scoring does not mean I think that the market's going to go down either. It just means that right now we have enough readings. If we're looking purely off of the overall score, it would tell us, sideways price action. Right? We may just consolidate for a month. It's possible. Just because we have the seasonality being bearish does not tell me, okay, drop everything and get bearish. Because you know what? The COT data, which we should take a look at here in just a second, still points at, some healthy bullishness for some of the indices. Before I get into the COT data, let me just talk you through some stuff that happened this past week that I think actually helped the stock market. So on Thursday, we had better than expected GDP numbers. Very nice, right? Preliminary GDP came out and it beat estimations, which again shows economic strength. And I love this. This is personally what I am most curious about, especially as we go into this upcoming week where we have the NFP number coming out this coming Friday. I want to see the jobs data. I want to see the GDP data come out strong. It adds some security to this rate cut into a soft landing story. If we're going to see a soft landing, we need to see the parts here hold up, the economic data hold up. Unemployment claims also came in. They came in just in line with estimations, which I think is perfectly fine. What would be more concerning would be if we were seeing spikes of higher unemployment claims, jobless claims. That would be more concerning. So we didn't see that. The past few weeks have been kind of pretty docile, not too super threatening. So let's also now just take a quick moment to look at the commitment of traders data. I know this is everybody's favorite, so let's have a look at it. And just a reminder, if you'd like to see what institutional money is doing on a weekly basis, this software is constantly updating and sharing all of its information with our users. We have thousands of users all over the globe. We have traders all over every continent using our software to scan market data and make more informed decisions in the market. If you would like to get a copy, remember that 35% off discount is available in the description down below. Don't miss it. It's ending today. That actually ends today. So the code is set to expire at the end of the day. So don't miss it. All right. So let's go through what we've got here. Remember the first section here. If you're a regular, you know where I'm going with this. The first section here shows you the overall net positioning on the commitment of traders data, which tells you the long-term kind of, show me the overall synopsis of longs versus shorts by non-commercial traders, which non-commercial traders is a fancy way of saying large speculators that are actually trying to, make money based on their investments. You might say as opposed to what? And the as opposed to is there's commercial traders that file as well, which are more like, I always like to think of like gold mining companies. If you owned a gold mining company, you don't actually want to be super sensitive to the price of gold. So you may use the futures market to offset your risk to gold by shorting gold contracts when prices go up, or longing gold contracts when prices, doing the opposite. My point is, there's non-commercials, which are speculators like us, right? People who are trying to make money based on what the direction is. And there are people who are simply trying to hedge their business activity. We want to focus on the speculators, the large speculators, hedge funds, banks, etc., which is what the Edgefinder focuses for you solely on. So all of the large speculators, the hedge funds, banks, etc., that is what we display in our software. So let's take a look at this together. And what we can see is gold still remains the number one long position by far. We have silver, we have oil, we have GBP, Nikkei actually exploded, and US dollar. Okay, on the flip side, we have the Canadian dollar getting sold the most, CHF, 10-year treasuries, NZD, and SPX. So there is your kind of high to low overall. Now, I always talk about this. I do like this chart a lot. The first chart is okay, but the second chart is better. Here's why. For long-term investors, this probably is all you need to look at if you want to keep an eye on the COT report. This just gives you like a snapshot that's kind of long-term in focus. But if you're a trader and you want to use the commitment of traders data, this information up here is kind of not super relevant unless you're holding position trades for like months. If you're a trader, if you're an active, intraday or short-term swing trader like myself, what you're looking for then is you're looking for the latest buys and sells, the big swings that you saw recently. And what we can see is right here, we built that table just for that purpose so that you can check this out each week for yourself. What's actually interesting here is we actually saw a pretty aggressive buying on the Nasdaq. So they added lots of longs, 9,787. That's pretty aggressive. And they even closed some shorts, leading to a big swing on the net percentage change. So we like to see that. That's really strong. Then we can take a look at like the euro got bought, the Australian dollar got bought, NZD got bought. And then you've got Russell in there. Love to see that. And you've got gold. So, sorry, I had to yawn. Gold also kind of an interesting one. They closed longs, but they closed more shorts. So they closed positioning across the board. That actually led to a slight lean more towards a bullish week, right? So if you have a bunch of longs and a bunch of shorts open and you closed way more shorts, that's kind of net bullish. That's kind of the way to read that. Dow Jones also saw some mild bullishness, closed some longs, closed a lot more shorts. So that's the way to read that there. I think, and we try and make this as readable as possible. And you can just, if you have the Edgefinder, just click on one of these and you'll see it lights up the way I'm doing this. So if we take a look at SPX, you can see SPX saw very modest buying here. We saw a increase in longs and an increase in shorts. So, and then on the flip side, in terms of selling, we see copper, we see US oil, which somewhat has been kind of fallen pretty aggressively. Take a quick look at oil. Oil fell 3% further on Friday. So oil's back, near its lows around 73. So, what could this be about? Well, it could be global, recession concerns, or maybe just slow down the global economy. I actually think that maybe a contrarian play may be looking to get into some oil and gas stocks or ETFs, or maybe even just buying some oil on a longer term basis. I'm just thinking out loud, but this is not something I'm currently in and wouldn't be a short term trade. But I think that, the rate cut story could actually lead to a little bit of a reacceleration in the US and global economy, which could increase the demand for oil. There's the other side of that, which is, geopolitics are continuously kind of plaguing us. Unfortunately, there's scary stuff happening in the world, and any escalation of potential wars or, violence can lead oil prices to spike. So perhaps as a bit of a portfolio hedge, I may look at adding some oil and gas stocks, especially if they continue to, see some decline. Ones that come to mind just off the top of my head are things like ExxonMobil and, Chevron, maybe CVX here. So Chevron, Exxon, which, they also are companies that pay dividends, I believe. Yep, you get a dividend, for trailing 12 month of 4.24%. So just by owning Chevron, you would have collected like 4%, which is not great considering the stock has gone nowhere in the last few years. But imagine you get that 4% dividend and the price starts to rebound, and you're right about oil prices and demand and companies doing well. It also, I hate to say it, but does have a dependency on kind of what happens with the who's in the White House scenario. That could play a role in whether oil stocks go up or down. I think that the idea is that Trump winning could potentially be better for oil and gas stocks, and vice versa. So I don't know. We'll see. It just kind of depends on their policies and that. But to be honest, on the election stuff, which is going to ramp up on my channel, unfortunately, again, I never like that phase of the year of the years of my channel, because people get all sorts of heated. But in terms of trying to just focus on that for the purpose of the markets, it is actually kind of important. So we'll be watching that and seeing. I have no idea who's going to win the election. At one point, it looked like it was going to be Trump. Now it's sort of looking like it might be Kamala Harris. We will see. But who becomes the president does have some impact on the markets. But I also want to overemphasize too, it doesn't play nearly as much of a role as what the Fed is doing. So I always pay way more attention to what the Treasury, Fed, what they're doing with the money supply is way more impactful day to day to markets. So anyways, I also wanted to talk about my SMH trade just for a moment here. And just a reminder, every trade that I take is inside of our Discord channel. I don't think I mentioned that here today, but I just wanted to point out that if you're somebody who would like to see the trades that I'm taking, it's not a copy service. That's not something we offer or advise. We don't do any financial advice. We simply share our trades that we're taking inside of the group for educational purposes. If this is something that you're interested in getting access to, you can see all of the trades that we're taking, trading gold, trading Forex, trading indices. We have Frank joining us, and or Frank, of course, his trades as well. So if you'd like to get into this group, there will also be a link and a promo code down below in the description. And the last thing I will say about this SMH trade is that, I've got a stop loss trailed here. I actually would like to see this thing continue to push north. If that breaks through the highs, then I can actually tighten the stop even a little bit more and try and let this trade continue to play out. But SMH, this has stocks like NVIDIA, AMD, Qualcomm, all of your semiconductors companies, which I am still very bullish on until, proven otherwise. These companies have a lot of growth. The AI trade and AI spin still seems intact from this latest round of earnings reports from major companies. So I like the trade. I like the story. So I'm going to stay long unless price disagrees with that idea. So again, I bought this one off of a moving average retest around the 200-day moving average. saw the way price was reacting to it, saw this big level of support on the SPX, the Nasdaq, and then looked over at SMH, found that trade, and this one has been kind of a monster for me. So we'll see if it can continue, but SMH is probably my favorite thing to check in on right now, that and the SPY, because of course those are my biggest positions currently. So last thing I will say, guys, is that if you're looking to trade with the broker that I'm using or one that can trade directly on TradingView, it is super convenient to be able to trade directly on TradingView. Please, I'm going to ask you as we close out, if you are not interested in buying anything from me or from my company, I totally understand. You definitely don't have to. You can learn stuff just by watching the videos. I totally get that. If you would like to, of course, all the information is in the description. But what's also in the description is that if you're looking for a better brokerage, this is a great way. If you're a long-term supporter of my channel and you would like to support in another way, you can sign up with one of the links down below in the description for one of the brokers down there. All of them are regulated brokerages that I have relationships with and have set up special perks for my audience to get when they sign up using those links. So there's deposit bonuses and things like that. You'll just have to do the research that's down there. But again, if you want to support my channel, a great way to do so is just consider using one of those affiliate links. You'll get something out of it and the channel will also benefit as well. So thank you guys very much for tuning in to today's video. I hope you have a great trading week ahead. Trade safe. We'll see you next time.